Joining me now, Ralph Schlosstein, Chairman Emeritus at Evercore. He has also co-founded BlackRock and spent nearly 2 decades as its president. Ralph, it's great to have you on the show. Welcome.
Great to be here, Morgan.
So I'm going to start right there because we just talked about some of the unwinding we're seeing in this market and some of the big moves across different asset classes. Just incredible volatility here. You've seen a number of market cycles and I would imagine a number of market disturbances. How would you factor this in versus what we've seen historically?
Well, if you look back historically, obviously the financial crisis in 2008, 2009, we had enormous volatility. In the COVID pandemic, we had enormous volatility. The difference here is that in both of those cases, it was exogenous factors that were causing volatility, and policy was effectively being used to reduce or offset that volatility. In this particular case, the volatility and the downdraft in the markets is actually precipitated by the policy of the government. And that's a little bit more alarming. And then I think the point that was just raised by your other commentator, what's very different here is normally when stocks go down as much as they have, there's a flight to quality, and quality becomes defined as U.S. Treasuries and the U.S. dollar. In this particular downdraft in the market, we're seeing Treasury yields go up and the dollar weaken. That's kind of an alarming trend. To me, that's flashing yellow that something is going on here more than just deleveraging.
So what do you think is going on? And I look at the Treasury market specifically, and there's been some speculation in recent days that part of what we've seen, and I haven't seen data to back it up, at least not yet, that part of what we've seen in the Treasury market and perhaps even in the FX market has to do with foreign investors maybe selling U.S. assets.
Yeah, we don't have any data on that at all other than anecdotal commentary, which I've heard some amount of in the last handful of days. That is concerning. I do think the markets generally are reacting to two things. One, extreme uncertainty as to what policy will be. I think there is some empathy among all market participants that that the U.S. hasn't always been treated fairly, both in tariff and non-tariff barriers to trade, and so there's some sympathy for the effort by President Trump to correct that. On the other hand, the dramatic shifts in policy make it very, very difficult for businesses, individuals, and particularly small businesses to make decisions, to make investments, to hire people. So what we're seeing in the real economy, and we don't have data on this yet, it's only anecdotal, but things are pulling back a little. People are pulling back a little bit. Companies are pulling back a little bit. And part of it is they don't really like some of the policy. It's too dramatic. But a big part of it is that just the uncertainty and the volatility of the policy itself.